Awesome. We are live here in the Independent Investor channel. Please to take the first thumbs up in the group. Let me know that I'm coming through as clear as I possibly can using Tangled technology. It's come up a little bit talking about my current upload schedule. I'm just offering the live stream now, and I'm completely good. Thank you, Mr. Bob Wright, who popped into the group first. You know, there's a lot of folks that are making their way in that I don't recognize. I think that's great. So I'd like to welcome all the new folks. I'd like to throw out a little bit of why we do this thing. Okay. I think it's awesome to get together and talk about different topics of interest, etc. This just happens to be a topic of extreme passion for me. If YouTube were able to give me a channel with 100,000 subscribers, I would still have the same perspective that I have now. With my small YouTube channel, what little or however large of an influence that we can make on whoever's interested in coming on and discussing finances, I'm all about it. And I think the cool part about being part of a community like this is everybody has the same chance to benefit, okay, whether it be a large benefit or whether it be a small benefit. Everybody has that similar shot. Now, I speak all the time about over the last 8 years of being a self-directed investor, it being not a small impact on my life. It was actually the opposite. It was a game changer for me. It really was. And there will be people that make their way into the message and not relate with me, not relate with the message. It is somewhat unorthodox to think that you can come onto YouTube and it can provide an optimal platform to run a community just like this, okay? But however small or however large the impact is, the cool thing about it is each and every one of you guys can start to implement some of these ideas for yourself. And there's a very, very specific reason why every single live stream, you guys know I call out the other channel creators because I can only make so much of an impact. I only have one opinion. I only have one delivery. Hell, I only have one YouTube channel. Contrary to some other folks who have multiple YouTube channels, I only need one. Okay, here's why. It's because there's people who come into this group every single Friday and want to be part of something special. And we can duplicate our efforts. If you're hearing different opinions from JMac Investing, who's made his way in here on a Friday evening, welcome to you. Financial Investor, I just saw pop in, so you guys can hit Brent up with questions. I've known Financial Investor ever since the inception of the Independent Investor channel. I've also got Average Joe in the group here. Dave, you know, is hopefully feeling better. Honestly, I don't want to say a whole heck of a lot more than that, but it's sure nice to see when his icon pops in here to the group. And I've also got someone in here, and I'll name out the channel creators as they do pop in here, but Gen X Dividend Investor also. I'm not sure if he or she is a channel creator, but I will call out. We've had a good back and forth here in the backstage party here that we're rolling, but the reason why I do that is to duplicate our efforts, okay? Not necessarily duplicate my message, okay? I do insist that this information that I put forth on the Independent Investor channel, with as little or as large of an impact as we can muster up, it's free of charge. It's free of charge. And I think some old ideals seem to say that, you know, the best things in life are free. I don't typically buy into a whole lot of cliche in my life. I really don't. But I think there is somewhat of an idea of building an audience and then somewhat using that audience to leverage your product, okay? I think a lot of this information is free of charge. It just so happens that I can offer a little bit of an edge and value because I do this. Okay, this is something that I actually do every single day. Case in point, some new double up positions this week, nothing crazy. Okay, doubled up on our position in Costco, rather large, 5-share, pushed it up to 10-share position in Costco. Obviously, a large position for me. That'll probably pass to my kids or put me in a position down the line to look at a sizable position in Costco 10, 15, 20 years from now, whatever it may be, and make a decision on that. That's the double up position number one. Number two was Estee Lauder this week, decided to do the exact same thing. Pushed that, holding up to 10 shares as well, added an additional 5 shares, and then supplemented the other portfolio with a new stake in Lowe's. I've owned Lowe's before, made really, really good money with Lowe's, but Home Depot has settled into the other portfolio quite nicely. I needed some discretionary exposure, so I went through and I looked through and combed through watch lists. Starbucks did not make the list based on valuation, in my opinion. I think the stock is going higher. For all you Starbucks owner, I'm a big advocate of the stock. I'm a big advocate of the company. But Starbucks did not get purchased this week as Lowe's did, okay? Now, those are some pretty sizable positions. And for you guys that may be coming in and new to the message and asking yourself why, well, here's a couple reasons why. If you didn't hear me out the first time, you can benefit from this information. You really can. Now, it may not be entering into 5 shares of Costco on a double up position, but my next thing here is my DCA contributions to my M1 finance account, okay? I do that every month, $25 a month. And if that's something that you're a new investor out there and you're tuning into the channel for the first time and you're like, Jesus, this guy's speaking to me, it's because I am, and it's because I do this. And $25 just so happens to be the amount that I started with when I started investing. And that type of lingo can relate with people, okay? Now, do not get confused, okay? I'm not going to deliver words that are going to blow your hair back, okay? I'm not going to offer words of wisdom that are going to make you faint in your couch, okay? I'm not going to get up here and I'm not going to sing a song and dance for you, because I just think that investing is what it is, okay? It's something that can be, it can be embraced by anyone. It's something that I say that everyone should do, no doubt about it, but I do believe that it's something that not everybody can do, okay? It is a luxury. It's not a necessity. I have my own opinion about that, but you guys understand where I'm coming from, okay? You can't go and invest if you're struggling to make ends meet, or if you're in debt. It just doesn't make any sense, okay? Now, eventually we will look to get your health and fitness, your financial health and fitness right before you do enter into the market. But I've always said that investing is for everyone, okay? And I think a lot of people do understand that, up to the point where they opt for an investing program that they may or may not fully understand. I would say that it's more of the latter, where people are taking advice from friends, family, etc., legacy financial planners to go in and subject your money to a management program, okay? And I've coined a couple subcategories tonight to walk you guys through a very basic lesson. I'm very good. I have basic lessons that come out my ears, okay? This is a good one. This ought to drive down the point for some of you new investors out there that are making their way into the group. And I just want to thank everybody, especially that come in, make their way in every single Friday. Honestly, you guys are the backbone of the Independent Investor Channel live stream. It's just my job to come in and facilitate the discussion. And I do thank you for entrusting me with that opportunity to do just that, because I do enjoy this topic. Not necessarily for me. Okay, when I'm looking at my portfolio, or when I'm looking to implement the strategies that I like. I was in it with Gen X Dividend Investor before the live stream kicked on. And it was asked of me what my strategy is, okay? And I know there's a bunch of strategies out there that exploit the dividend growth strategy, which is very, very good. Passive investing in the S&P 500 has also been proven to be quite the winner. A different application is required for each of those. I know some folks that do penny stock investing, and they're quite successful at that. However, it's not one of those strategies that I openly advocate for on the Independent Investor channel. That's okay. Most of the folks who have followed me know that I'm a money guy. Okay, if your strategy makes money, you're a winner, and that's a strategy that's acceptable to me. But there's a lot more that goes with deeming a strategy successful. How scalable is it? How easy is it to duplicate? How easy is it to maintain? That's the big one. Okay, can you maintain that program over the course of your life through the ebbs and the flows in the market? That's the key. Okay, you may win a couple battles, and I say it all the time. New investors get in and they think that they have to outsmart the market. Okay, I've got to make a few trades, and the worst thing that can happen is they do outsmart the market, and they make 20%, and all of a sudden they're wanting to quit their day job and start trading stock for a living. And they'll come across that roadblock, that barrier that is a rude awakening, and they'll end up taking a 30 or 40 or worse haircut in the market. That can be a real rude awakening, and for a lot of folks, it can turn a lot of people off. Okay, but for those folks that are interested in the investing world, I would highly encourage you to take a pause. If you're making your way into the channel, I'm so glad to have you. I do take it as a personal commitment of mine to save everybody, even though I fully well understand that is not the reality of it. There will continue to be folks that choose to opt into a financial planning program. But as I'm going to talk about tonight, the investing landscape has changed so dramatically, where I think a lot of people are a little bit stuck in the mud with traditional programs. They've bought into those traditional programs, and they won't change for nothing. Even though the investing landscape has made it so conducive to succeeding in self-directed investing, and it's worth a second look. It really is. And those are the folks that really are the most difficult to get. If they're not brought to the channel by a referral, we will not get to those people. We won't. But for the good folks in the group here that make their way in every Friday, thank you so much for coming in. It's an honor to have you in the group. I'm going to go through, there's just a lot of people in tonight. I've got over 50. There was somebody who popped in, I think it was Gen X, who popped in when we had 3. And I typically come on a little bit early and answer some questions. That's a good opportunity for some folks in a little bit more of a private setting, even though that thread will publish, okay, when the live stream does go live. And then, of course, I post this afterwards. But that's a great opportunity to speak with me almost one-on-one. And folks know that I'm popping on there, getting the live stream queued up for action. So just a little bit of an opportunity for you guys there. On the merchandise front, please bear with me on the merchandise. I did receive some more this week. I'm stoked. I'm happy with the quality of the merchandise. The timing and shipment, you're going to have to be a little patient on that. They are a little slow, but I was very, very encouraged by the quality of the product. But please stand by. I know I promised you guys a promotion last Friday. I guess the account isn't old enough, or there's not enough profit in the account to be eligible for those types of profit sharing programs, those promotions that I really do want to run. I rolled them out the day that I stood it up. But I've got a back and forth going on right now with Teespring. which is the YouTube sponsored merch. They handle all that stuff for YouTube. It's quite easy, but this is kind of a point of contention right now between us. It's not good, so we'll see what happens. See if I can get it zoned in so to where I can start to offer some free shipping and some discounts. I do think the merchandise is a little more on the pricier side, so I do want to offer those discounts to get those folks that are interested in that, so they can feel a little bit more like they're getting a good deal, because again, full price, nobody wants to pay full price. I teach that. We don't ever pay full price in the US. It's not worth it. So let me work that through. Let me iron out the details, and we'll keep you guys posted through the Facebook group as things do transpire. So really good stuff. All right. All right. Before I get to some questions, I do see just a ton of folks popping in here. That's awesome. I do want to just give you a quick rundown, because I know there will be a lot of people that engage in the Q&A with the questions in the live stream. But I do just want to run through my lesson really, really quick for those folks that tune in and they have to run after 25 minutes, okay? Most folks tune into the live stream for about 25 minutes to a half hour, and then it's quick, and if they're letting it play, that's great. But I do want to get this quick shot lesson out there, okay? For the folks that are making their way into the group and they just want that quick introduction to what it is, and I've identified some of the keys to the program. And the first key is commitment. You have to be willing to commit to the program. And with any investing program, whether it be with a managed situation or with a self-directed program, commitment has to be an all-the-time thing. You can't just be committed when the market is good, okay? That's easy to do. Your commitment will be tested when the volatility kicks up. People's commitment are being tested right now. Am I doing the right thing? What in the heck am I doing? The realization that you got this idea from a crazy guy on YouTube. Trust me, I'm not. Okay, this is stuff that I do and will continue to do. Use it, abuse it for your own benefit. Each and every one of you guys are either doing it now, or you know somebody who is not doing it, okay? Adjust accordingly. Make sure that we're sharing and making folks aware of the opportunity. But commitment is a big one. Commitment for a lot of people can be very, very scary. That's why they go in and seek out a financial coach, to have that little bit of buffer between them and the market. What you need to understand about that buffer is that you're paying for that buffer. And make no mistake about it, you're in charge of your money at all times. But when you introduce that buffer, it's because you've asked it to be put in between you and the market, okay? Next one, understanding. I think this is a twofold thing. A lot of people come to me and they're just very self-deprecating, and there's nothing I can do to become an expert in the market. I'll be the first to tell you, you just don't have to. When I talked about the landscape changing so much from the old ideology to the new investing landscape, there's so many products out there that can allow folks to enter into the investing landscape with very, very little cost associated, okay? Very, very intriguing products for those who are interested in more of a dividend approach. Folks that do not want to enter into single stock options, that just want to enter into passive ETF products, okay? Those products didn't exist when I started. And that's what a lot of you guys, I'm sure, will take for granted. Maybe not folks in the group, but you're certainly going to talk to people to be like, you know what, it's okay. I don't have the time, and I don't have the knowledge, and I don't have the understanding. The key things to understand on this channel we talk about all the time, and I would highly encourage you guys to seek out that basic level of understanding, and you'll be very encouraged to know it doesn't necessarily reside with the perfect stock. I've said this many, many times. the underlying fundamental benefit of at least being introduced to a channel like mine or others if they exist, okay? I'm really the one that plays the angle of the self-directed investor. And you can play that angle in a lot of different ways. But the sheer fact of the matter is Costco owned in a self-directed Roth IRA is different than Costco owned in a managed account, okay? It's different. The holdings are different. And it's especially different if you choose to own Costco in a taxable brokerage account, okay? So those three scenarios being completely different, a lot of folks don't even know that the self-directed option exists. And it does with most of the brokerages. You just have to ask. Because here's the thing, and I've said this many, many times. Who else is going to share the message with you? Who else is going to talk about it? It has to be individuals. That's why I cherry pick these guys out of the group. JMac Investing, when he comes on to support it, it's the least I can do. Why is that? Because the financial institutions are the ones who have a stranglehold on the media market. They have historical threads and roots into people's understanding of what type of service they provide. And most people are relatively happy with that level of service. But most people are conveniently naive to the impact of that level of service that they're paying for, okay? So you've got us as the little guys that are trying to work and share this information with each other, which again, there's no way in hell I could ever reach 15,000 people without the assistance of YouTube, okay? And that's why when somebody like Jason and Brent and these guys, Dave, come in and help me on this message, that's why I'm very, very adamant on pointing them out. Now, if they're trying to grow their channel, I'm all about that. That's the irony in the whole thing, you know? I want them to grow their channel. If one of them hit it big and hit a viral video and they ended up with 100,000 subscribers overnight, which can happen, that's the power of the social media platform, I would be all about it because I have a perspective that lets me in on some insight to say that 100,000 people is just a drop in the bucket of people who need to have this information. But for now, we're going to continue to try to duplicate our efforts, all right? Seek out that basic level of understanding. It's one of the key takeaways. Focus is an interesting one. I hopefully a lot of you guys will tune into my message because I tend to focus on things that a lot of people do not focus on, okay? The beauty of tax protection. Now, a lot of people do focus on tax protection. They can rattle it off and they can tell you exactly what it is and why it's important. But I think I was the one that coined the phrase wealth preservation. I love it because that is in fact the very root and the heartbeat of the money that you are putting to work to be liberated over time, okay? It doesn't do any good to put a good asset like Costco, for example, into a managed account that you're going to pay to fund that account, that you're going to pay over time to reinvest those dividends in that company. I just use Costco as an example, okay? But in a managed account, you're allowing them to opt into your account basically and use their money, use your money for their benefit, okay? So the focus has to be more on the structure than it is on the individual holdings, okay? And there's folks that pop in here all the time. I see JG in the group here. Costco's a good buy, only going up since September. So, you know, we can talk about some of the products, but I tend to put a lot of the focus where a lot of people, I think, kind of derive that self-deprecating idea that they don't understand about investing. You got to get over that, and you got to start to fine-tune your focus on those areas that I feel like you have to understand. You have to understand, and it's not that hard. It's not that hard. It's probably just, it'll make sense to you if you tune in and you start listening to the message and have some of your friends kind of explain the whole idea behind it. I mean, hell, the bottom line is a lot of the newer folks coming up through the ranks, man, folks in their late teens, early 20s, mid 20s, late 20s, they want to take charge of their life anyway. They don't want anybody telling them what to do. I like that. So the prospects of this gig for anybody getting into investing and wanting to be on the cutting edge, wanting to be on the front side of the wave, wanting to take advantage of some of those strategic products that are out there, this resonates with a lot of folks for that very reason alone. And then they'll backfill and they'll start to gain some of this understanding and focus as it goes, because you can kind of trip and fall and get some of the bare bones essentials, the account and the products. It's the stuff I talked about last week that's really important when I talk about that strategic edge. Okay, the edge piece is something that's going to be gained over time. You're not going to have a strategic edge. You're not going to be as sharp and focused as me to be teaching this stuff. Okay, what the philosophical or the psychological advantage of self-directing is, but you'll learn. You'll get there. Okay, it's not rocket science, guys. It's actually quite simple. All right. Validation is key too. There was probably some validation doled out this week in the market for all those folks out there that were probably panicking, coming out with all kinds of recession videos and talking about how the stock market's going to hell in a handbasket. I don't know. There's been some folks, I know, Bob, we were talking right away this evening about what we thought. And that's really all it is. It's just opinion. Hey, Bob, what do you think? I don't know, Ryan. You know, I'm just as confused as anybody else, and probably more so now than ever before, because you have quant and algorithmic trading going on right now. Once certain technicals hit, they really start to exacerbate the selling, and that's a new aspect of the stock market that is actually fairly new to me. So it begs the question, is more volatility going to be baked into the market now? And that makes us ask the question, is vulnerability something that we're going to have to deal with as an investor? Long term, you're going to have to deal with these upturns and downturns in the market. 600-point swings, they're seemingly much more common nowadays than they ever were before. If you would have had a 600-point drop in the Dow Jones Industrials when I started investing, you would have had people rushing the market. Seriously. Now it's just any given Tuesday. Yeah. All right. Validation. So validation is key. It always encourages the individual investor to always continually evaluate and use the lessons learned to look back over a week like this week and say, man, I'm glad I didn't panic. I'm glad I didn't panic when I had that 600-point down day and everybody came out and said, this is it. Pause. Because nobody ever knows when this is it. Nobody. And those discussions, they're funny. They fade away as the market starts to kind of improve a little bit. Those discussions really come and they're very wishy-washy. When things are good, the discussion is good. And when things are bad, things are terrible. Okay? It would really, really benefit you as a self-directed investor to take a unique path, one that kind of throws in the towel on both of those options and just say, I don't care. I don't care. I don't care what the market does day to day, and you really shouldn't care what it does month to month or year in and year out. If you're truly calling yourself an investor, you have your time horizon already earmarked, and that could be 5 years from now. I don't know. It could be 20, 30, 40, or beyond. Some of you guys that are tuning into the Independent Investor channel in their late teens, I know there's a few. And for the few that are actually trickling into this message and actually hearing this, because it's free of charge, it's not exclusive, okay? There's no age restriction, any of that. But for those savvy 18, 19, 20-year-olds that are making their way into this, you're golden. You really are. I would have absolutely given my right foot to have this information when I was younger. And the perspective that I would take from this is, it's like you got a guy on YouTube that's giving financial planning in his bare feet. Why? Because your ability to succeed in the market will have nothing to do with how nicely I'm dressed. Okay? It ain't gonna happen. All right? And that's the facade. That's the garbage piece of investing that I do want to try to not only exploit, but explain and draw people's awareness in that it doesn't matter how nice their office is. It doesn't matter how elegant their pamphlets are that they put in front of you. The sheer reality is you will be paying for that level of service. And that's real talk, guys. All right. So for those folks that are making their way and they're hearing that message, I'm all about it. I'd like to hear more from some of those younger folks that are making their ways because they're probably liberating their life. Quite frankly, it's that powerful. All right. The next key takeaway, and this is the final key takeaway, is the defensive aspect of this particular program. Look, you're saving so much more depending on how long your time horizon is. Think about how much money I'm giving you, okay? Here's the funny thing about it is I don't have an agenda, okay? I'm not trying to sell you anything, okay? I'm not trying to sell you a program. I'm not trying to sell you on the idea of self-directed investing. I'm not. I'm looking to introduce this to you. If you like it, great. If you don't, kick it to the curb. I'm okay with that. But here's the interesting thing. You can afford to be defensive. You can. You don't have to take unnecessary risk to try to outpace inflation. I've heard justifications that go something like this. You can justify going in and sitting down with a financial planner and surrendering your dividends to offset the cost of the 3% management fee that is the industry average across the industry. You can check it for yourself. Okay, so for you guys that just heard me and did not fall out of your couch, okay, that's powerful enough to look at the self-directed program and say, you know what? I'm tired of this. If for nothing else, if for nothing but just sheer principle of the issue, okay, if your time horizon is 30, 40 years plus, even if it's 5 or 10 years, every single year that goes by and you log as a self-directed investor, keep track of how much expense you're actually paying over that account and then compare it to what you would have paid had you been in a managed situation. One of the coolest videos I do compares these two things, okay? It compares these two things where you're looking at, you know, a longer horizon of 20, 30, 40 years plus. The mathematics of it are scary. They're scary. We're talking about figures upwards of 6 figures of savings over time. The more time you're willing to log as a self-directed investor as opposed to time logged in a managed situation, all right? You can afford to be defensive. Why do you think most of my assets are in passive, low-cost, Vanguard ETF products, good fixed equities products in the portfolio? Why do you think I own good quality dividends? Why do you think I don't go out there and buy second-tier retail stocks and jam those into my portfolio? Why do you think that Alibaba is not my #1 holding in my portfolio? Why? It's because my program is right. My program is right. Therefore, the holdings in my account can afford to be a little bit more defensive in nature because I'm tax protected and I'm wealth preserving my money. Every dividend that Home Depot pays me, I keep it all. I don't justify giving it away to some financial planner that I talk to once a year. Ain't gonna happen, not in my program. And if you heard me, you may want to take that and deploy it for yourself, all right? Now, I just made a list of barriers here, some of which I will get into a little bit and explain, okay? But the first one is the stigma. If you mention self-directed investing to somebody, watch their facial reaction, okay? I'm proud as hell. Okay, I'm proud as hell to be a self-directed investor. I've done nothing but prove it tenfold that this is absolutely a program that is absolutely scalable, and it's something that you can succeed, and you can succeed faster than you think When you liberate your money, it's amazing how much faster your money will accumulate and grow and seek what it is that I feel should be one of the justifiable reasons to invest, and that's compounding interest, right? It's amazing. But when you talk about the stigma and people are like, what, hold on, time, you're investing on your own? Are you nuts? Are you crazy? What are you doing? Like, how do you even, who do you think you are? Seriously, stigma, okay? We're here to blow some of those stigmas out of the water, okay? They don't exist anymore. Some of those barriers to entry, we really need to work to break through and at least ask some of the questions for yourself, okay, to understand this stigma and try to draw some answers for yourself as to where some of those come from. Success rates, okay? There's a reason why self-directed investing is hard to succeed at. It's because you don't understand your strategic edge when you start. You don't. You start, you have a little success, and then boom, the first hiccup you have, you're done because you don't have that support structure built for yourself. You don't understand your strategic edge. You don't understand it. You started the account and you put some good products in there, but you don't understand the why it is that you do it, which is the most important. Stigma. Barriers to entry is distraction. It was like pretty cool when Gen X was talking to me about what's your strategy, Ryan? And I responded in my way, of course, in that I don't typically like to prescribe to one style or the other, okay? If you don't want to own stock, you don't have to. If you don't want to own a dividend portfolio, don't have to do that either. And both of those options that I just threw out there have significantly different risk profiles attached to them, okay? Single stock investing in and of itself is not a diversified portfolio. I don't care what you say. You can give me 5 stocks and are you diversified? Yes, between those 5 you may be, but unless you own the entire S&P 500, for example, you are not diversified, okay? Unless you own a few hundred names, the S&P 500 may just be that, maybe the total market index, that has a few thousand names. Now we're talking diversification. So you give up some of the diversification for some of the potential for returns, but those risk tolerance profiles are not appropriate for most investors. They're not. You really have to be able to acknowledge and identify where those swings are, and you have to be able to weather through them. If you can't, you need to recalibrate your program, all right? So the distraction comes from a lot of people who come out and say that their program is the only way to go, and I'm not a proponent of that. I've got guys in the group here that they succeed very well with penny stock investing. So we need to keep investing in a corral. It's just that. Investing involves risk, right? So you have to be very, very careful about that. All right. So this is key here, the distraction. All right. Confidence. Confidence really comes with this understanding. If you understand why, you're definitely going to gain some of the confidence in understanding how you can trim the fat away from some of your portfolio holdings, or definitely some of the designation that you have over some of your accounts. All right. Super important. Awareness is key too. A lot of people think that there's only one option and one option only, which actually does one of two things. Either they invest, which I think is, I'd rather see people not invest, which is the other option. Okay. They don't understand this very, very viable option. And again, you're not going to call Wells Fargo and have them elegantly explain their situation to you. They're probably not going to use the word managed, and they're not going to use the word fee, and they're not going to use the term expense unless you ask them, okay? But they're certainly not going to offer the opportunity to their self-directed programs. Some brokers have it, others don't. Others have hybrid versions where they'll charge you like a point of management expense to do somewhat of a hybrid between a managed and a self-directed account, okay? Go full-blown self-directed. it's key. But the thing here, if I figure is a barrier, is a lot of people just don't know about it. Okay. And I'm totally okay with you knowing about it and not deciding to go with it, as opposed to not understanding that it's there in the first place and just opting to the next best thing by default. Okay. I can't do that. It's part of the reason why I do the channel. All right. Frustration is certainly a barrier. It's definitely an emotion. I really try to stress how important building your financial future is. And it doesn't have to come in the form of investing, okay? But you give up a little bit now for so much more later, okay? You may not want to be frustrated with the ups and downs of the market now, so you don't do it, okay? Nothing breaks my heart more when I go into, let's say, a Walmart or a department store, and there's somebody there that seemingly is down on their luck trying to work in their 50s, 60s, and 70s, okay? And they're doing so because they did not properly plan for their future. Now, I don't mean to imply that I know everybody's situation, because I don't. What I will imply is this: more people need to plan for their future to avoid that frustration later. Again, and it's going to require you to give up and get out of your own way a little bit. Okay? Going to require you to get out of your own way and take on a little bit of frustration now, okay, to avoid looking back over your life when you're older and saying, man alive, now it's 10 times as worse now. All right? Self-coach. A barrier to entry is that you're your coach. There's a lot of folks that come in here, hear my spiel every Friday. That can help. I mean, this is a discussion group. That's it. It's not a professional forum. I just showed you the bottom of my foot, okay? There's nothing professional about that, all right? I'm kicking in here, facilitating a discussion, talking openly as if you're sitting on the couch with me, chilling out, and we're talking about finances, kicking around some ideas. That's it. One of the barriers is just that. You mean you're going to put me in charge of my own money? You got to be kidding me, man. You'll propel yourself down the freeway at 70 miles an hour in charge of your own car, but you'll default and take the easy road when it comes to your own personal freaking finances. I don't understand the rationale, and I don't mean to impugn the audience. I don't. But here's the thing. Get over it. Okay? Get over it. There's so many things nowadays that Home Depot, home improvements. If you want to call in, I've got an electrician in the group. I've got Eric Weber, who's in the group, who's an electrician, okay? And I know he's a little bit different as a master electrician, but a journeyman electrician to come into your house, or a residential electrician to come into your house, it seemed like anybody ever wanted to come into my house and breathe on my house, it was $1,000, $1,000, and it's like, geez Louise, man, this thing costs like $100. I can go pick it up at Home Depot and put it into myself. Then do it, okay? But people are starting to get a little bit frustrated with always having to pay for services, okay? And we're looking for those ideas or those avenues that we can do ourselves, okay? We can't be our own doctor, but we can do things ourselves to avoid the doctor. People are actively exploiting those things, okay? People want to quit smoking cigarettes. Perfect example, okay? And they're scared of the prospects of doing so, but there's so many people out there that know that it's going to have to come to them and them alone to make sure that they can make it past that hurdle. Personal finance is the exact same thing. I would contend that personal finance can actually be a whole heck of a lot less scary once you start to dabble in it and get your feet wet, okay? Now, the third category is the takeaway. The takeaway from this, since we've been talking for about 44 minutes, hopefully this lesson kept a few more people engaged and around, and that way, once you get the lesson, you can exit stage left on the live stream and let me have some fun with my group over here. my brothers and sisters in the community here who make their way in for a cross dialogue, that of which I've been ignoring for the last 20 minutes. But that's fine, because I want you guys to take these takeaways away here. The intro. I want you to understand that you will not have anybody tell you about this, okay? So if nothing else, consider this a leaf turned over, okay? That's it. It's an introduction. If I've piqued your curiosity at all, okay, I've already turned the leaf over for you. I did it quite many moons ago, 8 years ago, as I was a misguided investor for a long, long time. And I don't contend to be a guided investor now. I certainly don't. But I've made a lot of mistakes. But I still remember the time that the introduction was made to me, and I paid attention. And that paying attention made all the difference. Okay. And I would contend that you guys do the same. The second thing is the evolution of the industry. I can't tell you how important this is. 20 years ago, self-directed investing would not have been possible. Okay, it wouldn't have been. The major brokerage houses hadn't come on. The race to the bottom for expense ratio lowering, the mass transfer of wealth from mutual funds to passive assets hadn't started to occur. Identifying multiple options out there, multiple products that people could enjoy the stock market and buy diversification right up front. And then the self-directed option is actually somewhat of a thing that's fairly new, to be honest with you. I don't keep track every single day of what major brokerages are coming online, but we do have some of the discount brokers that we offer through the Independent Investor Channel, through First Trade, and M1 Finance as well. Those accounts are going, they're active, they're well and good. That was the dollar cost average of $25 to M1 Finance. And then the additions this week to the First Trade account was 1 share of Fortis, which is a utility, ticker symbol FTS. And then everybody's favorite, I'm building a nice position in SPHD, which is the monthly dividend payer representative from the S&P 500 offered by Invesco. SPHD being the ticker symbol. We plussed up another 5 shares there for a total of 15 and change. There's just a couple points there of the dividend reinvestment there that's rolled into SPHD, okay? The takeaway here is just the idea. The idea for a lot of people of taking charge. That's it. And I think there's a lot of people who, if there's one person that listens to this and they're like, dang, that's pretty cool. Like, I don't really like somebody being in my nookers with regard to my money. The irony is you don't even like to talk about this topic. So why the hell are you giving some perfect stranger access to your money? I've always contended that there's no better person to trust with your money than you. You don't have to trust me, right? I'm just offering an awareness piece through YouTube, for crying out loud. This is a 2-hour piece that I do. That's why I do it right now. This is the bare minimum that I do on the Independent Investor Channel. Why? This is what I want to do. That's it. That's why I do it. That's it. I'm not looking to pump a bunch of content through YouTube right now. I'm not. I want to do this. So that's what I'm doing. And if it just so happens to be a Friday that you tune into the live stream to get my words with regard to this idea, then so be it. All right. I will attract the loyalists and I will trim the fat away from this message, because I really don't want people to come in here and muddle the message for people who are genuinely interested in taking one small step or one giant step forward toward financial security for themselves, their family, and all the people that they represent as somebody who's coming in here consuming the message, all right? It's the very idea of it. A lot of people are attracted to that. I am one of them, of taking control of your money. You listen, if you're going to make a mistake, you're the one to blame. But if you're going to have some successes on this gig, and if you understand your strategic edge, you are going to understand and want to give yourself credit for that, because you're the one that did it. You are. All right. The opportunity we talk about all the time, the takeaway and the opportunity here is that I'm really giving you a lot of time wasted back to you. Okay. If you're a young person and you're tuning into the message, if you're an elderly person, if you're, middle-aged like myself, 30, 40, etc., 50, age is relative to me, so I don't really care, but everybody wants to bracket everybody by their age. I don't understand it too much. But anyway, the opportunity for you can be curtailed to you, okay? There's nobody exempt from this. There's nobody that's that can't do it, okay? There's people in their 50s, 60s, and 70s that absolutely can do it. There's people in their teens, 20s, and 30s that can absolutely do it. It's just your opportunity is going to exist and be defined by you based on the level of exposure, the level of commitment that you have to the program. And that's the beautiful thing of it, is all I really need to do is show you the door. Most of you guys, all you need to do is walk through it. And finally, I will say this, with anything requires some level of action. Okay. Now I've got folks that have tuned into me for a long, long time, and they do enjoy the message, but I'm quite certain there's absolutely no action on their part. Make no mistake. We talk all the time. We come in here every single Friday and everybody wants to talk, and look at J-Mac is throwing his stars constellation into the group here, and that's freaking awesome. I like that revolving around the product. Why? Because it's fun. Some of the folks are like, yes, PhD, Ryan, you're the man. I'm the man. It's just a holding. It's just an asset. That's all it is. It doesn't define me as a human being. It's just an investment. It does certain things. It doesn't do certain things. It only has 50 holdings in it, guys. Okay. Do you consider that diversified? I don't. Okay. So we can have a discussion about that. But here's the thing. It's just an investment. Okay. But if you're going to succeed in investing, at some point, you got to invest. Okay. You got to take that little bit of leap. Now, the cool part about it is, and back to the not being, the confidence piece and the lack thereof, and some of those barriers, in that when you do take that leap of faith, it doesn't always have to be in a manner that is outside of your tolerance. Okay, it needs to reflect who you are and what type of investor you want to be. Remember this key, okay? Because this key right here could be over here all day. Bob talked to me right before I kicked on, and he says, I'm cautious right now, Ryan. And what was my response, Bob? I said, I'm cautious all the time. Why? Because I can afford to be. I can afford to be, because I deploy this strategy all the time. It's embedded in the root of why I do what I do. If I stay close to the vest, I don't have to be aggressive because my program's strong. I'm not surrendering a bunch of charges out the back end of my account while I'm working really hard on the front end to try to be overly aggressive to overcompensate for the amount of loss. I think any portfolio out there with flagship holdings of Amazon and Alibaba are crazy, okay? Now, I'm sorry to offer scary information to you. I understand everybody's up on these companies. I'm a big fan of Amazon and I'm a big fan of Alibaba, but in scale and in the right portfolio. But if you're going to come to me and tell me I'm a new investor, I want to put Amazon as my flagship company in that portfolio, and it's going to be 100% of that portfolio. First of all, it's not a portfolio. It's a single stock asset account. That's what it is. Okay. And I'm going to say we probably need to look at your risk tolerance and evaluate whether or not you can handle owning an asset like that. Okay. It's worth having a discussion on. I'm big on both companies, but it needs to be strategically deployed. Okay. And owning Amazon is a lot farther away from defensive than I need to be. Okay. I currently don't own Amazon, and I currently don't own Alibaba. All right, let's get to some of these questions, guys. I'll kick in and start the dialogue. There's just a ton of people in here. A ton of folks have dropped in here to support. I will go another half hour tonight. I'm going to try to. Last week I was on a roll. I gave over 2 hours. This one will probably go an hour and a half. I think that'll be about right for this lesson. I don't want to water down this evening. I've driven 8-9 hours today. I kicked up to Washington, D.C. for anybody who understands driving in Washington, D.C. when it's this type of holiday weekend traffic. It's not for the faint of heart. However, I enjoyed a tour free of charge, by the way, of Capitol Hill. And I encourage anybody ever who visits the DC area to take advantage of just that. I was blown away. It was absolutely awesome. All right. So let's get to some of these. I'll cruise up and do it from the top like I should do every time. But had a great conversation. I got Bob here. BTI hit 150 pre-market and then down to almost $1 during the day. Not sure if that's for today or not. My portfolio, for example, has really bounced back nicely. I haven't paid a whole lot of attention. I thought it was going lower than what it was. I just let it go, and lo and behold, it worked for me, and we got most all of it back. So we're grinning. That's just one of those life lessons, man. You stay true to your program, and it usually ends up working out well for you. Gen X Investor heard about your channel from JMax, who subbed and came to listen. Again, Gen X Dividend Investor, if you are a channel creator, shout out to you. Honestly, I try to leverage and bring awareness to other channels through mine. Why not? It's not like a sacrificial lamb or anything, but I just don't have a pride issue with trying to share a little bit of success that I've had on my channel to try to build up some of the other channels. And hey, if you gained 1 subscriber from my message, man, at least a little thank you is in order. I know Average Joe Investing and those guys, we've probably traded some subs as well as we've evolved. And I'm all about it in growing the community of really good folks. I tend to insist upon some ethical behavior. I certainly do. And that's indicative of the group in here. Friday after Friday, listen to the message. I've got Adriana in the group here. Welcome to you. Been a subscriber of the channel for a long time. She always keeps me honest. She can't wait for the book. I do have the 150 pages. I do leverage a lot of different projects. And right now I'm off of the YouTube project. Right now, I have an initiative to increase some technology, which is fine. That would take about a day, but I am just down on space, and I would love to do some of my recording in an actual studio, which if I was one of the larger channels, that's one thing I like about Graham Stephan is that he's really invested in himself. He's one of the only ones, quite frankly. I know Ryan Scribner has done some really cool things as well to throw some variety into the product that he puts forward, but there is no variety on the Independent Investor channel. It's raw Ryan. That's it. That's what you get. I would like to change that up a little bit. So those things are in the process. Whether or not they happen next month or 5 years from now, I don't know. They will happen. It's inevitable. But those things are in the works, and I'm really just kind of leveraging some other responsibilities that I have right now. Try not to overwhelm myself with those responsibilities. So please be patient with me as I do work through life and trying to find the inevitable answer to the question, why? All right. So Gen X says, appreciate you doing this. It's a pleasure of mine, man. Bull Ryan's best product on the platform. You have some zingers. I guess so. I think it's interesting enough. I don't script any of these. So the zingers come right off of the zing head, right out of my noggin, right to you guys, right directly, just like Wayne's World, man. Interesting enough. So Adriana asked me about some of the Chinese stocks. I'm not interested in Chinese stocks right here. I've owned China Mobile for quite some time. That was actually one of the positions I did add. I did not notate that, but I did add another 5 or 10, maybe 15, I think it was 15 shares of China Mobile here as a dividend player in the portfolio. That's the only one I own right now. I don't own any of the ones, but obviously the big 5 are my favorites, but I don't own any of them right now. I'm just not seeking any of that aggressive growth right now in the portfolio. I'm more apt to pursue some of the quality stuff and really fine-tuning my allocation within the portfolio. That's just what I've been doing, which is indicative by the Lowe's purchase and the Estee Lauder and Costco, quite frankly, all of them discretionals. So look to beef up that particular sector in the portfolio. That was my goal. All right. Bob Wright says, head over to San Pedro and smell the ocean. That's funny you say that. I've done that many, many times. So I got Dave's going through his fantasy draft right now, which is you if you can win that thing, you've got my kudos, that's for sure. So Gen X Dividend Investor says, cool, how about, so you guys are hooking it up there for your fantasy football. Good luck to you guys. I won't be participating. That's the 1 year I participated, I lost every game because I just came in with it like a calculative mind. And you basically got to pick all the wild cards, man. Those are the guys that show up at the start of the season, and those are the studs for fantasy football. And then everybody will pick them up next year, and they'll all get injured. So anyway, I got Eric Weber, good friend. It's awesome to have you again. Thank you for your service. I appreciate that. I tend to keep those discussions to a dull roar on the social media platforms, certainly to protect my privacy. But certainly most of the folks that have been with me know my affiliation when I'm not talking to you fine folks on a Friday evening over YouTube. But I'm glad to do it either way. It's kind of my calling, that's for sure. All right. I did have a great question here. I'm going to try to find it. I've got Victor Hernandez in the group here. It says Gen X awesome channel intro. Awesome. Okay, so that's my first indication that Gen X does have a channel. So great. If you guys would be so kind as to kick over, support that message, help them grow, get a basic community. Right now, YouTube's being a little stingy. I'm trying to get to that first 10,000 is a little bit tricky. Getting to the first 1,000's tricky enough. I don't know where Jason's at. I haven't kicked over and checked out the channel for a bit. But give me a subscriber count, Jason. Tell me where you're at, man. Hopefully these little injects help you anyway. It's hard to build a subscriber base if you don't have any help. I had help, so I'm not gonna sit here and tell you that it was all my work behind the scene. No, it wasn't, man. He hit me up and asked me how much work I put into it when I started. The answer is too much. Too much. It's a lot when you start. Okay. But kick over and help those respective channels grow if you wouldn't mind. That'd be awesome. All right. Get around to super late. Good. Cruising down, trying to cherry pick some questions of Christopher Blaine. Good evening, Jason. You guys made your way in here. That's awesome. I've got All Good, who's just a staunch supporter of the message, and my sincerest thank you to you as well. Great stuff. All Good's telling Jason to wrap. I saw it, Jason. Okay, I saw it. It seemed like a good bonding moment. If that was your kid, or if you've done one since then, good grief, man. You play that how you will. That's fine. I now play beef. I don't do it anymore. I don't have time for the back and forth. As your channel grows, you're going to find that no matter how good or however sincere you think that you are, there's always going to be people coming on that don't like your gig. And it's just that simple. Comes with the territory. Expect more as you do get bigger, and you can deal with it accordingly. I ignore it. I don't have time for it. I don't. You can listen to my message. You can throw tomatoes at the message, or you can just shut the channel off for all I care. I don't care. All right. I know what product I deliver, and I sleep well at night doing just that. Okay. I know Greg Cammey had hit me up with an interesting ask. It was a complete portfolio review I'm not prepared to do that this evening, Greg. What I will say is I added about 8%, so about 3/4 back in fixed equities. I added a few more fixed equities, so a little bit more fixed position there. I added a little bit more fixed position. I never had fixed in the in my thrift savings plan, the TSP that I have. I did do that, and then I do have what I feel is a suitable amount of cash on the side right now. I think that's an important aspect of going into whatever it is the next couple years is going to dole out in the market. Have some cash on the side. Trust your holdings. Eventually, you're going to have to become an investor. Okay, what I mean by that is when the stock market goes down and every one of your beautifully crafted blue chip stocks or ETFs that you put into that account of yours, they're going to go down. They're going to go down. And you're going to have to be an investor. All right. Now, I can sit here and talk until I'm blue in the face, but there will be people who fail at that very charge of mine, and it is not negotiable. It's not. Okay. You guys that have been investing for less than 10 years, please heed my concern. If you're entering into the stock market, it's not a game. It's something that you're going to have to trust in the historical precedence that has been set, and full well understand that that historical precedence that has been set does not guarantee future results. Okay. What it has proven to us is that most of those dips in history, I believe there have been 45 or 46 dips in the history of the stock market. Each and every one of them have proven to be a buying opportunity. Okay. But they happen quick. So for you folks that think that you're just going to get a 50% haircut overnight and you're going to get to strategically put your buy order in there with a big bow on top, think again. Okay. Think again. Even the best hedge fund managers can't time it that well. Okay. If you're going to be an investor for the long term and go do something else with your time while your money's working for you. Okay. So from those aspects, I know it's not specifics. I still have most of the portfolio that I declared to you guys some couple weeks ago anyway. You guys are still welcome to go in there and look at that. I hate to just give you a rapid fire rundown of the portfolio. It's kind of boring and it's kind of overwhelming, to be honest with you, but I'm looking at about 60-30 per, and some of my very favorites. I did add a couple random ETFs. I added VBR this week to mine. I wanted some small cap value exposure into the portfolio. I ran it through the allocator tool and determined that I wanted a little bit of small cap exposure. So I beefed up with a few $1,000 there, 25 shares or so, I think, in that ETF. Again, a Vanguard product, to get some small cap specific exposure there. But not too many changes other than the ones that I've outlined for you guys tonight. That's spread across, represent the first trade, M1 Finance, and the 2 Roth accounts, as well as the brokerage account. Okay, so maybe due for another portfolio review. But again, I don't want to saturate YouTube with a bunch of garbage that doesn't mean a whole lot outside of you guys looking at it and saying, wow, this is just an example of what somebody can do to build a respectable portfolio in the stock market. That's all I ever want from that, to be honest with you. I don't want you to look at my portfolio and say, wow, Ryan's got 400 grand. I can do that too. Oh, but I have to sign up for his monthly course for $99. That's just stupid. I'll never do that. That's idiotic. And it's greedy, to be honest with you. We're trying to look out for you. Okay. No new investor needs to be distracted by such things. Okay. Keep that money on your side. Put it to work for you. Okay. I don't need your money. I feed me and my family just fine. I don't need your money to help me feed them anymore. Okay. And me, I eat enough. Okay. I'm looking to eat less. So help me out. Okay, invest your own money. I don't need it. Cool. All right. All right. Again, I got J Mac in here. Forward to a good discussion. I think we've had it so far. An hour and 9 minutes have gone by for me so fast, like they always do, man. They always do. A dude from Silicon Valley, once you hit 10K in your channel, you have to. He's talking to Jason about that rap video he did, I think. But I asked him to throw the link in here, man. I want to see it. If there's a new one, I don't know, but I saw the other one. It's pretty funny. It's good stuff, man. I like it. Have a little fun, man. It's all good. I'm just way too serious to have fun. Jason says, I bought a mug. I saw that. I saw somebody bought a mug from me. I'm selling a little bit of merchandise. It's all good, and I appreciate the heck out of the help. It'll take a little bit. Just forget about it, and it'll show up at your doorstep. I got mine, and I was actually happy with the product. The quality's good, so you'll be happy with that. I can put something I can put my endorsement on and say, yeah, I'm proud to offer the product. It's pretty cool. Little overpriced again. I do apologize. I was trying to get that promo code out there and have been unsuccessful doing so far with Teespring, but we'll work on it. We'll get it there, guys. We will. We always do. All right. All right. So portfolio design, Greg Cammie, I could probably make an entire lesson on this question. I could probably do a course on this very question. It's really good. A question for the stream. Portfolio design, how many positions? So I told you about 30 single stock positions per Roth times 2. Okay, 2 Roths there with about 30 in each position. No duplicates in either one of the portfolios. Okay, so about 30 single stocks, all dividend payers, every one of them. I don't have one single stock that's a non-dividend payer in the portfolio. I can double check that just for transparency. And then there's, of course, some baseline ETFs in there as well. But I'm pretty darn close. I can tell you where I'm extremely underweight is my overseas exposure. I make some of that up in my TSP, where I've got a little bit of international exposure in there, and that just suits my suits my characteristics of what type of an investor I want to be, and I'm okay with that. My portfolio recommends about 35% international, and right now I've got very little, couple percent, 2, 3, 4. It's the most underweight I am in any of the recommendations. But as far as my large cap growth, large cap value, small cap growth and value. Small cap growth and value, I'm right on the money. Right on the money with real estate. Right on the money. When I say right on the money, I mean with regard to the recommended allocation for my aggressive risk tolerance profile. That's what I mean. So for you guys that don't know what I mean, I don't mean to speak so plainly, but I'm right on the money right now with my allocation. I'm very satisfied with where the portfolio recommended 11% in fixed income. I'm at about 8.5% right now, so I'm good there. A little bit overweight in cash, like I always am. Don't care. I would rather hold more cash. And that, again, the cash that I hold is cash within investment accounts. And that's not counting cash that I hold in other accounts ready to rock. Okay, multiple layers. That's the philosophy. I've got about 15, I guess, positions in first trade. The passive stuff, I've got VB for the small cap baseline. That's the largest holding. SPHD with 15 in there. Those are the only 2 ETFs I own. And then a pretty good handful of regionals, some pretty good dividend payers, some oil names, KMI, Marathon Oil, Halliburton in the services, which has just been a real dog, to be honest with you. And then a couple of smaller utilities and a couple of international telecom companies in first trade. And then you guys know how the M1 finance portfolio is built. I've shared that with you guys in all 11 sectors, technology being the highest weighted, and then all the way down to materials being the lowest weighted. I really like that way of investing. I really do. I think it's a piece of cake. I haven't touched it. I've set it, I fund it, and I let it go. Very simple. Why not? Why? Why do I do that? Because it's completely diversified. It's completely diversified across all the sectors, and it's set to an exposure rate that's indicative of what I want. I want technology to be the highest weighted. That's just what I do. And then so on down the line. I weight them as appropriate until I get to up to 100%. It's pretty cool. All right. Position sizing percentage to value. All things being equal, add on to positions or open a new one. So I've shared all of that stuff. The new position this week was Lowe's, LOW ticker symbol. Couple ETFs new, VBK, VBR. I think I bought them both, to be honest with you. I think I put value in one, and I think I put growth in the other one, if I'm not mistaken. But you guys know where those come from. Those are right off of the shopping mall, the Vanguard listing of ETF products. All right. So really good there. Okay. Greg, thanks for that question. That was awesome. A lot more than I want to get into on a live stream. I'd be talking all night. Anyway, sometimes wait till the promotion ends. Yeah. Gen X is talking about my friends at Les Schwab. If you've ever had your tires changed by those guys, it's amazing. It's so impressive. And they're running around the shop, man. Customer service, they're smiling. You know, he's talking about the free beef giveaway. Sorry, us Oregonians, man, we're a little different. We're a little different breed out there. So they are an amazing tire company. I'm telling you, it's good stuff. I gotta get that squared shirt. You should rock one of those hoodies without sleeves. Show off the guns. Yeah, I could. I've been working out like a champ, man. I've been taking a personal initiative to improve not only my spiritual well-being, but my dietary well-being. I could probably come out with another YouTube channel and talk about nothing but diet stuff, really good tips, quite frankly. I'd probably do quite well giving people the same as what I do for finances, which is a much smaller genre. To be honest with you, there's not a lot of folks who are coming onto YouTube looking for financial information. It's you guys come on and realize that you're part of something special here, no doubt about that. I'm part of it too. Don't leave me out. But yeah, the dietary piece, and then of course the political piece. That's a whole nother interesting aspect for me as well. With regard to dissolving divisiveness in our society and our world. Don't really understand it too much. I think most of the normal people that I talk to are somewhere in the middle on most issues anyway. So could probably start something pretty interesting there. But anyway, congrats, J-Mac, and your August dividends. Nice video you posted. And again, I think I came over the top and said, if you wanted to share those here in the group, I'd like to see that myself. I think the last video portfolio review I saw from Jason was a couple back. So I don't think I've seen this new one. So I'll take a look-see at that if I've got some time, Jason. Thanks. Drop you a comment. It's the best I can do. They are good, but I have been buying on Costco sales. Tires. Yeah, Costco's really good for that, man. Pretty awesome. I'm long Costco. I mean, Costco's one of those. I don't know. Costco will definitely sneak into the top 10 for stocks to own forever. I'm not sure if it wouldn't be justified in making the argument for Costco to maybe enter into the top 5, to be honest with you. It's that good of a company. So anyway, but I'm glad to have it in the portfolio. 10 shares of Costco is a big position, guys. That's you know, couple $100, 300 is what it's zooming in on right now per share. So pretty sizable little position. I'm glad to own it. You bet. I'm glad to be a shareholder in Costco. You bet. I love that business. It's awesome. Presented 2 weeks in a row. Hey, Brent, I'm scanning through, guys, the questions here. Aaron, Investing with Aaron just popped in. Sorry, man, I didn't get down to these, but Investing with Aaron, also another channel creator, obviously You get your shot out just like anybody. If I miss anybody, please, I do apologize. I don't mean to do that. You heard my rationale at the top of the live stream as to why I do that. It makes freaking perfect sense. At least it makes perfect sense to me as to why I do that. But appreciate you kicking in here anyway. Good evening, Ryan. I'm listening on my 13.1 mile run. Well, that's legit, man. Right on. I did my run yesterday. I did driving today. But I did run yesterday, and I run about 3 miles at a clip. I don't do 13.1, brother. So if you can, I tip my hat to you. That's awesome. You do, to each his own. You do what you got to do to keep that the spiritual balance, man, because that's what it's about for me. It's good stuff. Yarchar, hi Ryan, thanks for doing this for us. Eric Weaver invited me. Hey man, welcome. It's kind of cool. Those types of things really stick out to me. They really do, because it's something that I have echoed through the course of the channel in something that I value extremely high. Okay. And I put a referral way above a subscription, no doubt. A referral means somebody's tuned into the channel and been like, yeah, there's something different about this guy. I don't know, man. I can relate with him. He talks to me. And you felt that enough to where you've actually taken that and maybe turned somebody else on and be like, hey, I don't know, man, maybe you get the same reaction I do. I don't know, come check this out. I mean, if you don't like it, no big deal. But if you're here on a referral, you get my personal welcome, no doubt about it. Listen, the funny thing about me is we've got a little dab of success. We've generated a little bit of churn with an audience here on YouTube. We're a small channel, okay? We're fairly unknown, to be honest with you. As far as advertising on YouTube, there's kind of a method to my madness a little bit. In I know that I can put these infrequent upload schedules on my subscriber base and they'll stay with me. They will. And if you won't, I don't want you on the channel. I don't. But that's not the case here. I would rather have a loyal subscriber base than an unloyal subscriber base of 100,000 people. It doesn't make any sense to me. I'm trying to generate true value. I am. And true value to me, quite honestly, is, you know, the few hundred folks that pop in here every Friday on a live stream, folks that I can really get to know, and maybe even out of some of those folks can be ambassadors of the message. But it also is to the 1,000 people who tune into the live stream and can't tune into it live, but will turn this sucker on like a podcast, man, and listen to it afterwards. My shout out goes over to those people too, and they're no less important to me than anybody. That's really where the core of my focus is on the channel. That's why I'm not coming out with my 5-minute videos. Now, with that said, I know how important the 5-minute videos are, and I do have a plan of attack for doing just that. But here's the thing. I'm not in a hurry to do so, and I am going to do it my way, okay? And it's going to be about a 5 to 10 minute message, and the next time that I try to re-engage the message, it's going to be on a daily schedule, okay? I'm going to get myself on a little bit more, but to do a daily schedule for me, I'm going to need to have some of the goals and some of the things in place before I embark on that, because it's going to be a time commitment on my part, and I have to streamline a couple of my processes to make that a reality, and that's exactly what I'm going to do. But for now, you all are plank owners in this thing that we have, and it'll be fun for me to watch channels like Jason and Aaron, the guys that are in here. I've already watched Dave and Brent. I've watched their channels grow, and they'll grow as slow as they want to grow or as fast as they want to grow. They'll grow. The way that it was explained to me is, would you start a business with very limited overhead but unlimited upside potential? And to me, YouTube fits the bill. Okay. And I get to do it my way, how I want and where I want. I keep full creative control, and I give away nothing. And I also don't really bow to anybody else either. I don't watch a lot of other channels. That's just my approach. All right. Canines have been with me a long, long time. This is a great shirt. I like it too. It fits well. This is an extra large. Okay. I'm about 200 pounds. I've got a little bit of girth upstairs. Okay. So for you guys looking to size out the Independent Investor Channel t-shirt, now this is the one style out of two that I made. So you'll see the different styles on there if you kick on there, if you haven't so already. Tim Teller's in the group, says, good evening. Good evening to you. I'm cruising down here, Yarchar. This is a great experience for me. So if you're new to the channel, just absorb it. You're obviously here on an invitation, certainly. I aim to make an impact. This is live stream number 62. This is one of the most enjoyable things that I do, because typically when I get on a roll talking about finances, I can typically roll for quite some time, as indicated by some of the timestamps on some of my live streams. I can go for a while, but I think that's all right. I think it's fun. I think it gives me the time to focus in on folks that are making their way in, and they say, man, this is a great experience. Maybe it's a little bit of an eye-opener. Don't hesitate. You know, some of the folks that have tuned into multiple messages, they've ground truth what I talk about. I'm not a financial planner, okay? I disclose that in every video that I put out. And if you catch my drift, it's somewhat of an industry that I'm kind of against, okay? So not only am I not one, I never will be, because I believe in a whole different philosophy than what the agenda of the financial planning institution demonstrates, okay? I think we can be so much more powerful and leverage a lot more of this defensive mechanism. That's why I talk about the importance of cash the way that I do. That's why I talk about the importance of blue chip dividend investing, just going after the very best of the best, or a dividend ETF if you don't want to own the single stocks, or a total market ETF within a self-directed Roth IRA account can really be some of the easiest entry to the stock market that I can offer. Very simple. I do the same thing. All right. But it's great to have you. And it's even more great to have you, honestly, on a referral. That means a lot to me. Really does. Kind of a fuel for my fire. Hey, Jared, yes, I need to order a shirt and support the movement. Yeah, you're going to have to pay full price. So depending on how much you want to support the message, some of the folks come in and they offer a pretty good tip in the live stream. YouTube takes a lot of that. It's such a crock, man. And that's why I figured if you were going to spend a few dollars tipping in the live stream to help support some of the initiatives I've got going on, support my time, show some appreciation for the message, I do appreciate that. I would just rather have it not come in the form of a tip. And I'm asking you, like, I can't believe, like, oh my God, did he just say, don't give me money? Yeah, I did, because I don't really want it to go to YouTube. But the merchandise aspect, I keep all that profit, okay? It's pretty cool. So, and you get something out of it as well, as opposed to just a tip, okay? It's a lot of the reason why I've never done Patreon. Never. No way. They take too much. Stupid. All right. Where can I get the fine merch? Yep. So it's actually displayed on the bottom of most every one of my videos now through YouTube, and you can click over and check that solo collection that I've got out now. Designed it all myself. Yep. Out of my extensive experience. Turned out pretty good, man. I'm actually stoked. When I got it, I unraveled it. I was like, okay, that's all right, man. I can deal with this. Pretty cool. Very comfortable. This is the the comfort shirt. So a little bit more expensive for these. They're made with multiple material. So it's not just the cotton cheap. It's the little bit better quality, I think. But it's a good one, man. Absolutely. Support away. I'm all about it. So Kevin Eno 260 Estee Lauder under fire for donating money to the Trump's campaign. For that, I like Estee Lauder even more. Nice. Trying to get me to allude. I just think Estee Lauder's it's got such a wide moat with their product. I do like Ulta Beauty and I like Sephora. I like all three, to be honest with you. Nordstrom's is interesting enough, but buying into Nordstrom's right now is not quite as crazy as buying into Macy's, but you're buying into a space right now with huge overhead pressure, huge, and it comes in the form of one word: Amazon, baby. If you want to go buy those stores, anything that's associated with the mall, go ahead. Foot Locker just did it to themselves. That quarter was horrendous. I don't really understand what the draw is in that stock. I own Nike. There's a reason why I own Nike. I love their product. I think their technology is phenomenal. Technology has such worldwide brand recognition. They have such control and command over the industry. I'm just not into buying into the space that offers those products. I would rather just go right after the product itself. But really good stuff, man. That's just kind of the way I feel about it. But Estee Lauder is a no-brainer for me. No-brainer. Lululemon is probably one of the very few athletic wear companies that is on a niche that is worth taking a look at. Okay. Even Canada Goose, I looked at it for a while and not so much. But Lululemon, yes, that's right there with the yoga popularity. It's on a vein right now of popularity that I don't think is going away, and that's the preferred. The problem with fashion is that when men and women start to move away from a particular brand, it tends to come in waves, and it tends to go in waves. And if you're on the back end and you're holding a stock that goes out of fashion really quick, it can hurt the stock. Michael Kors. So anyway, thoughts on Best Buy Q2. It's very good. You know, it's funny. Best Buy has been one of those companies that I've never owned. Never owned it. I have to look. It's not a stock I cover either. So I'd have to look at the quarter. I think it was a very good one, if I'm not mistaken. Please correct me if I'm wrong. I believe I just picked up on that in passing, how good the quarter was. If I'm not mistaken, I believe it was a good one. But Best Buy is a good company. I really like it. It's an excellent retailer. I enjoy the experience when I go into Best Buy, but I would have to do a deep dive on Best Buy because it's not one that I'm interested in covering, but it should be. I'm glad you brought it up, John. Thank you for that. I appreciate it. I'm uploading a video on Home Depot right now. Good. Do it. Why don't you do one on Lowe's? Lowe's is probably a better stock, to be honest with you. It's funny to say that because it goes against my philosophy. I think Home Depot is a better retailer. I do. It's just Lowe's is a very diversified. They've got some interesting businesses that aren't talked about very often. Their pet business, and they're also all over Canada. You betcha. It's good stuff. Minute 32. I'll give you some little bit of bonus time here. I'm actually having fun. I'm in a groove, and I'm almost to the bottom of this, I think. I'll probably get dumped on here as I approach the bottom, which is usually what happens. Costco's goodbye only going up. Just got the YouTube notification, a new record. Awesome. I added Altria and Philip Morris. Wow, you did both of them. That's really an interesting move, Jared Odell, man. I like the move. I really do. I don't know if it's just my morality. I look at Altria and Philip Morris as being the premiers in the space. It's interesting that they're looking to get back together again after splitting the international and the domestic businesses. I do worry a little bit that they're looking to combine two powerhouse businesses in an industry that is consolidating. Because at the end of the day, smoking's bad for you. We just had the first confirmed death of vaping this week. Something to just, and that doesn't help. Everything's unhealthy for you. Drinking bad water can cause cancer. I get it. Okay. I'm not saying that that's not an issue, but somebody dying of vaping, even if it's one person, that's the first confirmed death of something that they're heavily into right now. And I know that the businesses that they're pursuing are interesting enough. From a dividend perspective, I've looked at each of these companies. They're strong. They're strong. And together they're going to be even stronger. But again, I worry about some of the pressure, and I'm not going to fall victim. I bought Dow DuPont on those merger news, and I've owned it ever since. And man alive, what a rocket roller coaster that has been. Splitting, combining back again, splitting, getting some shares of Corteva out of it, which Corteva is probably the best out of all three of the companies anyway, to be honest with you, with their agricultural business. I'm more interested in that. Dow DuPont and DuPont and Dow now have been real laggards, real underperformers. They'll eventually come back, and I'm holding them. But there's some black spots in the portfolio for sure. Not looking too great, but whatever. I'm still an investor of the company. All right. Added 2 shares of SPHD, 1 share of DGRO, and 1 share of VYM this week. Nice. Jesus. Well, all in 1 week. Took another allocation in SPHD. SPHD is going to be one of those assets that you probably just accumulate over your life. I like it. It's a unique product. I'm not ecstatic about the expense ratio, especially for a passive product. Now, there was some work put into selecting the 50 in SPHD. There was some work there. That's great. But when they're making 30 basis points every single year off of work that's done and is now passive, I'm not a big fan of. VYM, if I'm not mistaken, is 10 basis points perhaps. And I think that Jason from JMac Investing uses a similar product from Fidelity that is even less than both of them, significantly less than SPHD, but also less than VYM from Vanguard. So, do your research. Again, awareness is key. No one is more right than the other, but something to look at is the expense of each of the products respectively, and that should play into your decision. I own both of them. That's how I decide. I just own them both. And I throttle the allocation based on the expense. And SPHD seemingly fit a really nice baseline position in my first trade account, and that's where I utilize that product. It's very good. I match that with a small cap Vanguard product, and that's my passive baseline right there. All right, good stuff. My personal favorite dividend. So DGRO, there you go. Jason offers that right below. I just needed to read a little bit further, so thank you. Appreciate that. All right, how to take a look at DGRO, you bet. I've already done that after Jason had mentioned it on one of his videos, so it's never so going back to us 5 years. Okay, I'm scanning through here, guys. Don't forget to thumbs up, folks. Gen X, thanks. I've had a real good discussion with you. I think most of the folks have hit the thumbs up already. There was a little stretch there where it went up. I've got Magic 43 in here. Troy Polamalu, my boy. No, it's back up to 45 again. People are still peeking in. They're like, dang, this guy's still going. What the heck is going on? I should really look and see when it starts to go up and do something like, and just get people's attention. Now that's what it takes on YouTube. No, I'm just kidding. A little bit more of an astute audience that demands a little bit more than that. Why? Because I do too. I don't appreciate being patronized. All right. Good evening. Great free info. Amazing. I think it would be great info. I got Cesar Nunez. I think it would be great information if somebody was paying me to offer it at a conference, certainly. So it's definitely good information. If I'm offering it through YouTube, I enjoy doing it. If it ever pays back, awesome. I'm the type of mindset that would do some amazing things with the financial aspect, but that is not my sole driver of doing YouTube. My sole driver is not getting rich. The irony is I'm money motivated. That's the funny thing about it. But my motivation to do YouTube is not to get rich. Okay, if that someday helps supplement my goal of financial security, then I'm all about that. That's fine. But it will be my way, and it certainly will not be at the expense of any of my subscribers that come on and look to consume my small niche of information, no doubt. If they feel inclined to pay somebody else to give them what they feel is a strategic edge, go ahead. You'll learn a lesson that a lot of people learn, and that you should have just taken that money and you should have just put it away for yourself. That simple. You'll learn. You'll learn. If you haven't done that, I tip my hat to those folks who heard what I just said and they avoid that mistake altogether. All right. Yes, free information. I'm glad to offer it. Okay. J Mac and Master Webco. That apple juice looks good. Okay. Yeah, I do enjoy it. I appreciate that. We're going to wrap it up here pretty quick, an hour and 40 minutes into the live stream, and I'm almost down to the bottom. I've got Charles Bragg, SEAL Team, Rick's in the house. Awesome. Looks like he's a Browns fan. That's awesome. I freaking love Cleveland Browns. Awesome. I love the city of Cleveland, man. It's like, you all got heart, man. I swear. It's awesome. That's a good game to watch, the Steelers and the Browns. Freaking right, man. Awesome. I'm pretty fired up for football season, no doubt. So it's great to have you in the group. Good stuff. Isn't recession a part of the business cycle? It is. It sure is. I don't know. It's been a little bit more predictable. Anybody who says that it can fall into any type of traditional cycle, as you refer to, Greg, this time around, I think there's a lot more complexities this time around. I really do. We're dealing with a whole different playing field this time around. Whole different game of unpredictability with what the president is doing. I mean, we just struck a trade deal with Japan this week, if anybody paid attention. I found that interesting. So instead of trying to strike a deal with China, we're trying to strike a deal with everybody else surrounding China. I think it's brilliant. That's just me. It's my freaking opinion. Take it for what you will. I think it's interesting as well. The plan may fall on its face and the Dow may lose 2,500 points, but we'll see. But those are some of the unpredictabilities that I talk about now in the market that you can't account for that. You can't say yeah, it's part of the business cycle, but when it's going to happen, I mean, what if we strike a deal with China within the next couple of weeks? What's that going to do to the market? Who knows? Is the recession talk going to be off the table for another 2 or 3 years because we've just decided to throw a curveball at China that they couldn't hit? Very interesting stuff right now. Again, kind of comes back to the fundamental investing approach. Stay close to the vest, stay defensive, do invest, but invest in such a manner that defines your degree of acceptance, okay? You have to be able to accept the level of risk that you're putting forward in the market in whatever exposure form you choose. For example, the product that you choose, all right? All right. I honestly want a 2-3 year long recession. I'm in the accumulation with fairly good income. I missed the 2008, 2009 because at that time I was a young investor with lower income. Wow, that's really an interesting thought. Really, there's a lot there to be had. I'd like to see you not beat yourself up. You're not, trust me, you're not the only one. And it's so much easier in hindsight, looking back and saying, wow, would have been nice. You know, I look back and say, I missed it. I mean, if I had been smarter, I would have put everything that I had in then. But the thing about it was then nobody was talking about investing. Everybody was talking about the stock market going to zero. Remember? Excuse me, I was buying a house in Detroit, Michigan. There was not one person that told me it was a good move. It ended up being one of the best financial moves of my life. But nobody at the time said, wow, you're getting it. Wow, it's smart, Ryan. You're buying some property up there, right on. It's about as recessed as it's going to be. No, they didn't say that. What they said is, are you sure you don't need to get your head examined? Or what are you doing? Or wow, you're crazy. This market's going to zero. Same idea, right? So it's easier to look back and kind of kick yourself a little bit. I would keep that to a minimum, really. If you're doing what you need to do now, because now is a more opportune time for you to be doing that, do it. And don't look back. Don't have a memory in the market. Be mechanical about your approach. You'll be so much better off mentally. Do what you can do when you can do it, and be good with it. You know what I mean? But it's a good comment. There's a lot there. I wish I had a little bit more time on that one. That was a good one. All right. Good valuations in any type of market. Greg, yep, I agree. And I'm looking at that. Ryan, do you have a concealed carry permit for those guns? Nah. Yeah, nah. Appreciate that. Jeez Louise, man. Just trying to do what I can do, you know. I'm not sure what guns really do for you, but you know, I mean these guns. But I do box. I really like that. It's a lot of fun for me. So it's very, very cool stuff, man. Do you specialize in dating advice? I could. I really could, actually. I could tell you how to snag a European supermodel, I guess, which is what I did. I would recommend that to anybody. It's been very good for me. Perhaps maybe you are in the wrong forum, but it's a cool question, and I'll take it because it's funny, and I think a lot of people will get a good laugh out of that. I'm responding to the U.S. government. Do you specialize in dating advice? I definitely could. Again, I wasn't a big dater. I didn't like the word date. When I think of the word date, I think of a dried fruit that I want to eat. And most of my dates ended up either a couple minutes of, hey, it's been really nice to meet you, but good luck to you. That's typically how it went until I met this one, which was a slam dunk. All right. But I definitely have a lot to render in between those two things, certainly. And that could be YouTube channel idea number 4, actually. But we'll talk about that at another time. I'm still trying to get the Independent Investor channel off of the ground floor here, man. But thank you for offering that question. Very, very cool, very funny. You got a rise out of me anyway. That's funny. I'm kind of partial to the fee-free platforms as well, even though I have a holdover TD account from my Scottrade days and an E-Trade because they bought out Capital One. You bet. So Eric Weber, good stuff. You touch on something interesting I want to mention to the group. If you are with a broker that you have a managed account with, please keep in mind you may be able to redesignate that account, keep the holdings exactly the same. A Roth to a Roth, there's nothing that needs to be done other than a redesignation of that account. That's it. All right, so if you have some of those, I know E-Trade, for example, does have self-directed accounts. Whether or not they had them at the time that you were doing business with them, I don't think Scottrade does. I was with them many, many moons ago. And didn't have quite the experience back then that they're probably rendering now. I don't know a whole lot about the Scottrade experience now. I know they were one of the first really aggressive online brokers, but all the majors have come in and done quite well in competing in the space. So I can't speak about how good or bad they are. I don't know. It's not one of those ones that come up in my opinion pool at all. So, but just keep that in mind for anybody out there that has that existing broker, you know, that self-directed designation option. That's there. That's with a simple phone call, guys. Very simple to call them up and say, hey, I've got this. There was somebody on YouTube. Don't mention, actually do mention YouTube. I think it'd be funny. It's all in the delivery, baby. It's all in the delivery. But if you call them and you say, hey, I had this guy on YouTube mention this self-directed account, they'd be like, what's the channel? I'm just kidding. It's very real, and it's just the designation over the account. Some are fairly rude. Some will actually be quite obliging. I can only speak about mine, which is Bank of America, Merrill. They're very good. They do support their self-directed investor community very, very well. I can't speak directly about some of the others. I can definitely speak indirectly about a lot of them. Okay. How many holdings do you suggest that would be true diversification? So all good. That's probably one of the best questions that I've got. I will say this. If you are looking for true diversification, please do not try to seek that via single stock ownership. Okay. With that said, if you are interested in single stock ownership, certainly want to gravitate to those sectors that you're most interested in. You know, the 11 sectors that are out there. Okay. Whether or not you want more of a dividend type of approach, okay, you'd be more into the real estate utility type of approach. Maybe even look at some of those materials offerings, some of the staples offerings offer more a higher than average dividend there. But I think you can have your cake and eat it too. I think you can have a nice dividend payer, okay, in the form of an ETF, and also have your diversification, okay? And I think if you do own single stock, I don't think you can have diversification. You can have that dividend income, but you're not going to have that dividend the portfolio that's diversified, okay? If you're looking at 10, 15, 20 holdings, because there is no number in my mind. I mean, we talked about the SPHD pretty significantly tonight, and that's 50 holdings. Does that mean you're diversified? Some would say yes. I would say no. Okay. And there's a reason why that. I just think that true diversification comes in owning as much of the broad market as you can. The S&P 500, in my opinion, is that top of the iceberg. It's really what everybody pursues as far as getting those feelers into the U.S. large cap stock market. And I think it's very important to understand that. So I think you could own one fund through the S&P 500 and be realizing one of the most overlooked but underappreciated tools in your tool bag, and that is diversification that you can possibly have. Diversification is so important. And so many people give away the farm, and they're not diversified, and they think that they need to go out there and go with that aggressive single stock approach, 5 to 10 names, etc. You're not diversified, remember? So you're kind of doubling down on, I give you a good fundamental perspective, and then you double down by entering into single stock allocation, which can be very good for you. But remember this, remember the defensive approach, right? You don't always have to do that. I really, really enjoy owning VYM. I think it's a great look, give you a nice exposure to a bunch of dividends. I think it's a couple hundred, if I'm not mistaken. You guys would have to cross-check me. Again, I don't commit all these to memory, but I'd have to look in there and just see how much that differs from a product like an SPHD, as opposed to the VYM, which I think does have a couple hundred products in there, if I'm not mistaken. So you just buy that one ETF and you do own that. But the degree of diversification is basically indicative of the number of holdings within that particular ETF or index fund. For example, a VTI with a couple thousand is going to be more diversified than a product like a VOO that has the S&P 500 holdings. All right, that's the best answer I can give you there. All right, I'm going to continue to go. Stephen T, I've been exclusively with Vanguard since last year, and I'm very pleased. You should be. They're very good. Prior to that, I was with Merrill Edge and E-Trade. Awesome. I would like to know what you mean by be with them. If you actually hold an account with them, I'm addressing Stephen T. Here in the group, says they're very happy with Vanguard. And I think if you're talking about having an account with them, I do appreciate that opinion, because I kind of data log those away when I have people talk about them. I made the call to them. I was actually thinking about going with their Voyeur program that they have, and I did not like what I heard specifically. I stayed with Merrill. I'm a very happy customer. There's very little, if anything, that's negative to say about my experience with Merrill, especially with regard to the lower than average incentive thresholds where I think Vanguard is a lot higher than most, or that they need to be. I think they're trying to keep away the trader customer and really market their product to more of a passive type of investor, which is fine. It's their prerogative to do that. Mike O, you got a good comment there. You guys are willing to recommend to review that one. I'm going to cruise down. I own MO and stars for the Jesus, you guys are funny. Anyway, 10,000 T free trades. However, thresholds based on 3 average of brokerage. Okay, good. Yes, exactly. I'm not going to spend $7 to buy a single share. Exactly. That's some of the benefit of having some of those lower cost brokers, man. It's a big deal. I have Robinhood, had a few stocks and a few companies, but I have negative 151.46. I'm not sure how you did that. I've got Nightwolf 19 on the line here. I have a few stocks and a few companies, but I have negative 151.46 on my account. I don't know if that's just the loss right now, which is fine. That's just part of investing. Good grief. You're not going to win them all. Sometimes you got to wait them out. That's the key there for sure. Start collecting some good dividend payers, turn it around. Exactly. That's some pretty sound advice. I like that. Cruise on down. Pepsi and Coke, everyone. Yep, there it is. I just had the dump. I just had the dump of comments come in here. I'm not going to get to address all these at the bottom here for sure. Gen X, thanks specifically. Thank you so much for the referral that came in from Mr. Eric Weber. It's awesome. Appreciate that. Some of the folks that stick in my mind, certainly Jason and Dave and Brent, making their way into Gen X as well, and Aaron as well. Thank you to the channel creators that have kicked in tonight. But most specifically, thank you for the self-directed individual investors that pop into the group. You guys are the core of the community, no doubt about it. We're going to sign off less than 2 hours, just a little bit shy of 2 hours into the live stream. So folks that review this content after it goes live on YouTube can do so. Remember some of the products that we do roll out. I talk all the time about me offering this information free of charge. It will continue to be just that. One of the ways that I do receive some compensation is through the affiliate program, that of which we offer through M1 Finance. Those details are at the bottom of every video that I post, as well as First Trade. Okay, each of those products are explained in detail in affiliate marketing videos. I do receive a small bit of compensation for doing that. It'll remain that way. I will not be doing Webull. I don't like what I see. It will remain First Trade and M1 Finance. Both products I utilize personally. I do enjoy them, and they do fit a specific profile for the specific type of investor. And finally, check out the merch. I do apologize. Just shelf the discount situation that I'm dealing with right now. There's only one of me, so I can't really kick it to my logistics department to handle for me. It's all me, baby. So I'm going to continue to do that and work those issues, and we'll continue to grow and evolve together on the Independent Investor channel and the extended family and community, which you all are a part of. So thank you so much, guys. Enjoy your holiday weekend. Be safe. Don't do anything crazy. And God certainly be with Florida, certainly over the next couple days. Absolutely. We will keep those folks in our thoughts as well for the next couple days as they deal with a natural anomaly that looks like it's going to be pretty big. All right. So with that, I will sign off. We will catch you next Friday on live stream number 63. All the best to you guys, and good luck in your investing next week as well. And we'll touch base next week. Thanks a lot, guys. I'll be signing off now. Thank you.